Good morning, everyone. Hope your weekend treated you well. Let's jump in. NIO posted modest gains into Monday's close, holding firm near $4.87 after rising 6 cents from Friday's $4.81 close. Futures and sector cues suggest cautious optimism, but before we break down what might lie ahead for the stock, let's pull back and consider what shaped Monday's move. At the heart of today's action was a swirl of geopolitical tension and macro undercurrents. President Trump met with Ukrainian President Zelensky and European counterparts at the White House, discussing potential peace frameworks and security guarantees in light of the Ukraine-Russia conflict. While talks held strategic significance, markets largely treated them as expected, a round of diplomatic theater without immediate shocks. Oil prices barely budged, and the broader S&P 500 and Nasdaq drifted sideways as investors turned their gaze toward the upcoming Jackson Hole Fed symposium later in the week. Against this backdrop, NIO managed to shake off the noise with a steady hand. The stock traded in a narrow range, climbing into the 490 intraday level before settling at 487. That's important because it hints at underlying bid interest even amid uncertainty. NIO remains just below the key $5 resistance level, a line that has acted as a psychological ceiling for weeks now. Friday's rebound helped retest the 480 to 490 zone, likely supported by short covering and renewed Onvo interest, but so far it hasn't crossed into breakout territory. This standstill suggests markets are waiting on actual catalysts, not just sentiment or headlines. Across the Chinese EV sector, peers like XPeng, Li Auto, and BYD gave off mixed signals. The mood remains cautious, hopeful in some corners, but without coordinated momentum across the group. Still, structural tailwinds for NIO remain. The company has shown solid delivery performance, continued expansion of its battery swap network, and an ongoing mass-market push through Onvo. These elements underpin the long-term case for NIO, even as near-term sentiment remains uncertain. Looking at the wider market, while no immediate economic fallout emerged from the Trump-Zelensky meeting, the risk is baked into the narrative. Investors are watching to see whether diplomatic pressure could shift US.Russia trade dynamics, oil flows, or even China policy messaging. On top of that, the Fed looms large. The Jackson Hole Conference is expected to provide signals about the direction of interest rates, and rate expectations directly influence growth stocks like NIO. That makes this week critical for positioning. So what does this mean for NIO shareholders heading into the next sessions? First, the $5 resistance level remains the key technical marker. Holding above 480 is constructive, but a decisive push through $5 would change the tone. Second, catalysts are essential. Any delivery updates, new pre-order data for the Onvo L90, or fresh commentary from management could spark renewed interest. Third, macro cues cannot be ignored. While headlines about Trump and Zelensky may stir intraday trading noise, the real driver for growth stocks will likely be whether the Fed leans toward easing or signals more patience. Fourth, there's strategy to consider. For traders, a strong open above 490 could ignite a quick run at $5, though weak macro guidance could cap those moves. For long-term investors, this is a reminder that NIO can hold ground even amid geopolitical noise, but sustainable gains depend on execution and company-backed momentum. Looking further out, attention will soon shift back to delivery cycles, earnings chatter, and global EV competition. NIO's moves aren't just about price action, they are about how effectively the company navigates between retail optimism and institutional caution. Holding steady in the face of uncertainty suggests that at least some buyers see value at these levels, but without strong catalysts, the stock risks drifting in a tight range. To wrap up, NIO held its ground on Monday with modest gains, keeping alive the potential for a breakout even as the market watched the geopolitical theater in Washington. No major headlines disrupted the stock's grip on the 480 to 490 range, and that suggests investors are beginning to refocus on fundamentals and technical posture. The real question is whether this quiet hold sets up a breakout in the week ahead, or if broader macro caution will keep NIO constrained. We'll be following all of it closely. Keep an eye on that $5 resistance level, the Fed's messaging from Jackson Hole, and any tangible updates on Onvo or deliveries. If you found this breakdown helpful, hit the like button, subscribe for pre-market updates and weekly EV analysis, and let me know in the comments. Do you think NIO is setting the stage for a breakout, or is this just another pause in a long sideways stretch? Either way, trade smart, and I'll see you in the next one.